Welcome back now for commodities market update. We see Brent crude futures was down about 96, trading at $96 a barrel this morning, down about 29 cents after rising about $2 on Monday. U.S. West Texas Intermediate crude dropped about 36 cents to $95.10 a barrel after gaining $2.36 on the previous day. All right, now let's get the market update now with Dumebi Yeke right here, from Financial Derivatives Company. Great to have you.
Thank you so much.
Morning.
Good morning.
So much, happening with all, but we're having that pullback today, and all eyes seem to be on Ukraine and Russia. What's going on?
No, still the same thing. The tensions are still there, and if anything, it's somewhat escalated. So the expectation is that, that would continue to keep Brent price, very close to the $100 benchmark. But, there's also the fact that supply constraints are also, propping prices up. OPEC hasn't, increased supply substantially. We have the difficulties with the U.S. Oil supply as well. So all of this combined are just, supporting oil price right now. Even though there was a decline today, the markets are still expecting that oil prices will, still remain very bullish in net term, and that's because of the Russia and Ukraine tensions.
Right, and bringing it back, let's talk about the increasing quota, OPEC increasing
Nigeria's quota.
What's happening there?
Yeah, so basically, OPEC at its last meeting increased Nigeria's quota from 1.68 to 1.7. Now, with that happening, there's a lot of exactly. So there's a lot of skepticism, around that for Nigeria meeting its quota, especially either in the short term or even in the medium term, and that's because Nigeria is really struggling to, produce even up to 1.4 million barrels per day. So that's really a huge problem. So, and the factors affecting that, there's the issue of vandalism and theft. There's the fact that there are a lot of crude equipment that need maintenance or need replacement that have not been able to, and that has not been able to happen, due to underinvestment within the sector. There's also the fact that there are a lot of maintenance issues at the Focados and Bonny Light and the Bonny production, oil production centers, for lack of better words. So basically, all of these things put together are affecting Nigeria's oil production. And where it becomes very tricky is that oil production is where Nigeria makes more money, not even oil prices. If anything, Nigeria imports, refined petroleum products. And there are also issues regarding that as well, because as at today, there are about 11 ships awaiting berth with refined petroleum products, that have not yet even made their way through to the economy or through to the system. So there's that. There's the fact that oil prices are higher. So meaning that the import cost on this is even, is already more compared to what Nigeria will be making in terms of revenue, because we export the crude oil itself, not the refined petroleum products. And that's why we're seeing issues of fuel scarcity. And although there was the issue of, the adulterated, but at the same time, because right now prices are still not reflective of, operating costs. So marketers, even though there's the issue of the adulterated PMS, in circulation, the truth of the matter remains that it's somewhat of an initial market reaction, because they are spending more to import this commodity, and the market price is not reflecting that. So even though they definitely would have some pullback, and by default, we've seen that happen over time. There's artificial scarcity created. Marketers will hurt so that prices can go up. And why this is even very significant is because diesel is selling for about 400,
new high there.
Yes, exactly. So, and that's because that market is deregulated already. So prices are reflective of excuse me.
Sorry.
So prices are reflective of market happenings.
Realities. And we're seeing, in parts of Nigeria, we've seen fuel sell for about 400 naira per liter. Are we seeing the realities there?
So basically, that's just, with the delay in the fuel subsidy removal, so already, there's the case of underinvestment within the sector. So now investors are more skeptical, about investing in Nigeria's downstream petroleum sector. And now with the fuel scarcity, clearly it just shows that the real price of fuel, even if, because right now the prices are going to be somewhat escalated, so the real prices will be ranging around 300 to about 350. If the government does remove fuel subsidy and allows the market to regulate itself and allows competitive pricing, allows market prices to reflect the cost of import and cost of operations for various companies involved in the importation of fuel into the country, or selling of fuel, or even drilling whatsoever. So all of these activities, the prices need to be reflected in all of the activities need to be reflected in the price of the commodity.
Right, and we're expecting January's inflation
today,
any day, any moment.
Yeah, today, tomorrow.
Now,
yeah.
What are the expectations here?
We expect commodity prices to. We expect inflation rather to increase. Our forecast is about 15.86, and why we're doing that is because, or why we're saying that is because all the factors point to another increase in inflation. Let's look at the price of diesel. Starting with that, all the trucks that bring food into various states of the country from the food belt, they are run by diesel, and diesel has increased about 420 per liter. So meaning that their transport cost has already increased, distribution cost is higher, logistics cost is higher, and they will definitely pass the burden down to consumers in form of higher prices. So that's one aspect. Number two, global commodity prices are higher. Nigeria is a net importer of so many commodities that we make use of in the country. And, the more we import, the more our import, bill is going to be. And all of this is also going to be reflected in commodity prices. And let's not forget the exchange rate pass-through effect to commodity prices as well. So there are so many things affecting commodity prices, and all of this will continue to keep prices high.
Right, and also I see that the International Monetary Fund has warned that Nigeria's decade-long rise in public debt, could create both a financial as well as a revenue squeeze for the economy. Quite a grim projection there.
Yes, it's pretty worrisome. When we look at the numbers, this is about $92 billion we're looking at, and it's a very scary scenario because if we do that, if we discount that amongst all of us in Nigeria, it means that everybody has some level of debt to pay.
I think the last, sorry, yeah.
Yes, exactly. So all of us have some level of debt to pay, and unfortunately,
was it about 200,000 per person?
Exactly. And now imagine a situation where the average person is not even living up to $1 per day, and now they're telling you that you have a debt incurred not by yourself, that you even have to pay for. So what this clearly signifies or signals is that the government is going to still be more aggressive in trying to generate revenue, and that's because its major source of revenue is currently being disrupted, and that's oil production. So the government, if you notice, from December last year to January this year, and even beginning of February, we've seen a spree of new taxes coming up. The FIRS has said they're going to do this. They're going to tax bonds and the income from bonds and other short-term securities. We've seen that there's now the sugar tax, the digital tax. So the government is basically trying to increase its revenue base from on a fiscal level. Now that's by increasing taxes. But the unfortunate scenario, the unfortunate thing is that businesses are already struggling to come back, and right now there's this squeeze, the squeezing revenue. So, and the big thing about this is that it's going to come back to the consumer. So imagine a company that's trying to stay afloat, already paying a CIT of about 30%. There's VAT of 7.5%. There's digital tax of about 6%. There's so there's so many taxes that these companies will have to pay for. And remember, there are other factors that already hamper production. Because they probably will have to import some of their raw materials because of shortages within the country. So what we'll likely see is possible layoffs or salary cuts. So disposable income is going to decline further. And if disposable income declines, demand and consumption is also going to decline. So even though on a fiscal level, the government is trying to, increase its revenue, because of the fact that demand is not being pushed up, the net effect is not going to, generally have a significant impact on the economy, because demand, investment and consumption levels are significantly low.
It's quite a worrying
yes,
picture painted there. It is. But we had the unveiling of the rice pyramids recently, but for some reason we're seeing the price of rice Still up. And,
yes.
But I don't think we expected it to drop immediately. We didn't, right?
Well, not exactly, but, you know, the fact is that there have been so many schemes to boosting, geared towards boosting rice production in the country, local production of rice in the country. We've seen some pullback on the side of demand, and that's because of the quality of the rice. People still prefer to either buy basmati rice, or at least when you get to the market, you ID marketer is there for rice. I mean,
Exactly.
some of them will not even answer you. They just say, hey, you can take this one, or you can take this one. That's because of the quality of the rice. But nonetheless, the truth is that the rice pyramid, what happened with it is that the rice that was milled, you know, was just somewhat for show, basically. You know, so what has happened is that the refined or the finished product hasn't yet gotten into the market completely, and that's,
it was more like a statement, some kind of statement.
Exactly, just somewhat of statement trying to say something is happening. But really, we don't just want a statement right now. We need an increase in supply of rice to beat down price and, you know, satisfy local demand of rice within the country. So there's a lot of things happening in the commodity space. For rice, that's a major staple for a lot of people. It's like the basic thing for almost every Nigerian home. If you're not eating jollof rice for breakfast, you're eating it as lunch, or then you take rice and stew, or you take fried rice, or you take concussion rice,
or
fada rice. Rice is part of,
yes,
you know, every day. So clearly there's high demand for it, and there's shortage of imported rice in the country already because of the forex restrictions. So all of this put together is going to continue to keep the price of rice as high as it is now.
Right. Yeah. And I see there's something going on with sugar too.
Yes.
See, there's a war between major producers. What's stoking this war this time?
So basically, Boa Foods released a statement saying that flour mills, you know, has somewhat stopped the sales of sugar, and same as well for Dangote. But when we look at this holistically, the market for sugar is a free market. Everybody has the right to play. You know, everybody's playing individually, but also on a competitive scale. So, and not only that, there's imported sugar. Nigeria still imports sugar. So with all of this, you know, put together, you can clearly see that the demand and supply for sugar is not speculative. So there's really no need for anyone creating artificial scarcity in a bid to increase price, because if there's shortage of supply, price will definitely increase because of demand.
Because we cannot afford sugar prices going
we can't afford that, because that, you know, there'll be a ripple effect.
Oh, yeah.
But clearly, if this escalates, there could be an increase in the price of sugar, and that would, you know, eat into or somewhat push the price of other related commodities, because sugar is used as an input material for making of bread, meat pie,
the baking industry,
basically. So there's so many things that, you know, would be affected if the price of sugar increases. So basically, we are keeping our fingers crossed, hoping that this war doesn't escalate. Yeah.
All right, let's see what's happening with other domestic commodities. I'm seeing mostly unchanged prices here.
Yeah.
It's more Gary. Gary's down, and rice edging up there. What's happening?
So still the same thing. Prices have not changed so much from last month, and that's because, you know, demand is still pretty slow. Supply right now is, you know, it's picking up, you know, gradually as the economy rebounds. So we're seeing some activity in that area. But basically, with all the issues that we've mentioned concerning the production, logistics costs, transport costs, we could see some of these prices change, you know, and they're going to increase very soon. And that, you know, based on the fact that there are so many factors affecting, you know, the production and supply of these commodities into the market.
All right, maybe it's obviously not looking so good,
yes,
you know,
quite
this market, but we're hoping for, you know, better days ahead. Maybe Yeke Financial Derivatives Company. So good having you today.
Thank you so much.
All right, we'll take a moment now.